Total U.S. household debt and credit card balances increased in the third quarter of 2024 by $147 billion and $24 billion, respectively. This is according to the New York Fed. And according to our next guest, 2025 could be the year of a credit hangover. Here with more on what might be ahead for consumer credit, we have VantageScore Chief Strategy Officer, Rikard Bandebo. Great to have you here in studio with us.
Delighted to be here.
Certainly. So let's talk about this a little bit.
Sure.
Exactly what would a credit hangover look like if we see that play out?
Well, so, before I go into that, let's just understand the bigger picture. Obviously, as you've had many people tell you, that the economy as a whole is doing pretty well. And at VantageScore, we look a lot at consumer credit health, as we're a credit scoring company. And what we see is that the consumer, for most part, is actually going into 2025 pretty credit healthy. However, underneath that, there are some cracks, and what we're seeing is that there's going to be some particular segments of the consumer population that are going to struggle much more in 2025.
And so with that in mind, the hangover, as consumers are trying to navigate the spending that they do during the holiday season with the, oh my gosh moment of how much did we actually spend?
So what's been happening is that, since COVID, we saw originally a lot of consumers reduce their debt. But we're now at a point where we actually have the most amount of credit card debt in US history. So it's definitely come up quite a bit. The other thing that we're seeing as well is that the delinquency rates for credit cards have gone up about 50% over the past 2 years. So we're seeing that it's one of the fastest areas increasing in delinquencies. And we're expecting that trend to follow through into 2025. And that's being driven, as I said, by a few key things going on, both in terms of by certain types of consumer categories, but also in terms of what's happening with the K-shaped recovery.
So with that in mind, I wonder, because we just got data out from consumer confidence and the conference board here today, talking about U.S. consumer confidence pulling back in December. It seems like for multiple readings over the course of this year, we had continued to hear about a resilient consumer, but based on the data that you're laying out, and based on this most recent reading, there are clearly some cracks in the consumer, if not in the wallet and the spending propensity and ability, then in the mindset and the confidence going forward as well. What do you make of that?
So I think we're seeing a couple of things. One thing is, look, plenty of consumers, the reason why the amount of credit card debt is increasing is because prices are going up and they're being able to handle that. But underneath that, there is a growing number of consumers who are actually really struggling to make ends meet with the big increase in costs that they've had since COVID. And as a result, they're actually relying more and more on products like credit cards or personal loans or maybe even buy now, pay later as a way to subsidize their living. And the problem with that is it's digging them into a deeper credit hole.
Yeah. So with that in mind, as you think about the themes going into next year expected in the post-holiday credit hangover, how are you assessing those themes, and where, for some bright news in all of this, where consumers can best position themselves to tackle any of their debt that's related to the credit market right now?
So, I think, again, for the most part, most consumers are in a pretty good position. What we are seeing is that, obviously, if they start missing any payments, that can impact them on their credit score quite significantly. And when their credit score goes down, that means they may not be able to get the types of financial products that they want in the future, or they may have to pay a lot more to have them. So the first guidance is always just don't miss those payments. Do whatever you can to try to ensure that you're keeping your accounts up to date and on time.
Absolutely. Rikard, thanks so much for taking the time here with us today. Really appreciate the conversation. We're going to be checking back in just to make sure that we're not all totally hungover next year. Appreciate it.
Thank you.